Man, time flies. For anybody who's new, just to bang it out, get out of the way before I forget, wallstreetjesus.com. If you have any questions or any interest, you could go take a peek over there and you'll get some more information. All right, any other questions, hit me up on Twitter if I see it. All right, let's get cracking here. Interesting day that's been setting up probably since the start of earnings season. Hold on, I gotta mute this because it's driving me nuts. Hold on. All right, interesting day that's been setting up here for since the start of earnings season, at least over the past week or so, where we last left off on this webinar, on the Wednesday webinar. If you guys remember, we were heading into the meat of earnings season, some of the bigger names getting ready to report, you know, the Facebooks of the world, Netflix, Apple, all that jazz. And, you know, there were quite a few things, quite a few signals that we look at that stressed to at least be careful. If you had some profits, probably be a good idea to at least trim and roll out. You want to stay long, put on some protection just to be safe, you know, that sort of thing. Not that ultimately there was a crash coming to a theater near you, nothing like that, but buyers were getting a bit tired. And if this turned out to be a sell the news event, which it ultimately was, you know, we can run into some weakness. And that's the problem. You never know what the weakness is going to look like, right? I'll give you an example. If I felt confident that we would have, you know, a couple of days like we had the last couple of days, with today being the brunt of the weakness, and CLF rage higher through that process, or energy names we were looking at, you know, trade higher through that process. You know, obviously there were other things to do. I didn't have to go into a full cash position like I did, but, you know, easier said than done, right? Monday morning quarterback. We can talk about that now, knowing the outcome, okay? But I didn't have the conviction. I really couldn't gauge how it would all play out. Could energy buck the trend and go higher if some of the other groups would run into trouble, okay? And what actually happened today, it initially started as a distribution day, if you want to call it that. But after the early morning, it actually turned into more of a rotation day, okay, where money was coming out of tech, money was coming out of some of the growth stuff, and rotating into energy, commodity, steel, and all that stuff, okay? So it played out a little different today, all right? But, you know, with all the risks that were on the horizon at the time, and you think about it, so we were over here, right? This is where we were when we started to talk about it, okay? And this is the problem. If you're going to buy this, again, when you're just using ES, S&P 500 as a general example here, right? If you're going to buy this, especially aggressively, you may be up the next day or two or three, right? And that's what happens. A lot of traders who follow sentiment and follow positioning and follow all that stuff, the signals we look at for the first time, this shit doesn't work. You know, when they don't see instant results, and then you get caught in something like this, and this is just, you never know what this is going to turn out to be, right? This is just the start. And when you're playing, which a lot of you do now these days, when you're playing options primarily, a day like today can wipe you out. So, and I try to stress that to a lot of you who are actively trading. Investing is one thing, actively trading is a whole other can of worms, okay? you got to learn to be early. You're better off being early, right? When you're looking at the right stuff, okay, even if you're early, it ends up being beneficial on the buy side and when selling, right? If you're paying attention to sentiment and initial activity as far as flow, even if you're early, you may be underwater initially, but when that squeeze comes, it should be rewarding. And at the same, on the flip side, on the sell side, you rather be early, miss a little bit of upside, right? And avoid getting caught in a day that's going to wipe out most of your premium. So when you're playing options, especially, and trading options, especially some of the strikes you guys play a week out, 2 weeks out, you really got to work on those things. Otherwise, you don't have a shot in hell. It's hard enough to begin with. All right, so that's one thing that I've really drilled into my head over the course of my career, especially on the sell side. I'm not going to let further upside bother me if I'm seeing things that I don't feel comfortable about. Okay, I'd rather be early. It gives me more time to think. I don't have to pull the plug maybe and rush out of something that minute, right? And if you think about how it played out, it really played out perfectly for us because we were betting on a run up into earnings and into the Fed, if you remember, right? So the rationale was that the momentum would continue higher into the FOMC meeting because everybody was expecting a dovish Fed, into earnings. Everybody knew earnings were going to be incredible. The whole world knows that already. Okay. So you had that momentum to the upside, and that's where you wanted to take advantage of it, sell into that. And then you saw what happened, right? Powell, uber dovish, big shit. We knew that. The problem is that might be the last time you see Powell that dovish again. You understand? The market's always looking ahead. Everything you and I see in front of us, that's old news, right? The market digested it, spit it out, gone. Always looking ahead, right? Amazon comes out with, and Facebook and Apple come out with unbelievable earnings. Everybody expected it. That's why the stocks didn't budge, And what happens, you see how it's almost a delayed reaction. The stocks didn't just go straight down off of those positive outcomes, right? It's almost like they left the stocks there so the average player out there could say, oh, look, I'm getting a bargain maybe, right? I'm getting a bargain. Powell was this dovish and this market didn't even go anywhere. That's got to be a buying opportunity, right? So it almost waits and allows people, reels them in before it gives them the shaft. That's how the market likes to play games. Okay. And what happened over the course of the last couple of days, not to get too technical with you guys, because I don't want to lose anybody, but what we were seeing for a good period of time, we were seeing into the FOMC, even though players were bullish, they were hedging their positions with SPX puts into the Fed. Okay, just in case. So you had elevated protection in the S&P 500, the index, while there was full positioning on the long side in individual names. Okay. What changed over the last couple of days, and those of you who are members know this is what the Gamma Gang was referring to, that protection came off. So in other words, that protection going into the Fed and into the start of earnings season, the last couple of days, they started to take that off. And that's what opened up a window for a little bit of weakness, which happened to be today. It could have been tomorrow or whatever the case. So that's what went on up till now. Okay. From here on, okay, and then we'll go look at some of the things we look at each Wednesday. We spoke about, I mentioned a couple times today that for aggressive players out there, right? Because we're not all different. Some people really want to roll the dice, right? They don't have patience. If they miss a trade, they want to commit suicide, I mean, sometimes you got, all out degenerates too. Just what are you going to do? But if you are super aggressive, okay, or not super, if you're aggressive and you wanted to make a play, you could have pulled the trigger late afternoon, right? Find a spot, find an entry, maybe off some intraday sentiment. We had a bullish anti-VIX signal, that sort of thing, and put on a long, betting on some positive reaction from earnings, and then you get that little gap up to sell into tomorrow, right? That's your tactical trade if you're aggressive. If you're more conservative, or you just feel like it's not compelling enough to put on a play like that, the more conservative route would be to sit tight, see how tomorrow plays out. If there's a gap up off the open, you can't touch it. Okay? You can't touch it. You can scalp, you can do that sort of thing, but you cannot, chase a gap from here. Okay? But if we do get any additional weakness and we start to see some of our shorter term sentiment signals line up, that would set up a better tactical play. Okay? Something you don't really have to rush out of into the first batch of green that you see, right? Something where gets gamma involved and a few of our sentiment indicators, and you can, at least if there is a squeeze, it should be a pretty decent one. So it's worthwhile. All right, we'll go over all that when we look at the stuff we look at every week. All right, so those are the two scenarios, right? So basically into the lows, let me get this off here. For those of you who may not have been around or aren't members, hold on. Oh, my bad. All right, so this is what it looked like intraday. Trading view, slow. So into these lows is where we had that, bullish intraday signal. As far as the anti-VIX, you could see breadth start to improve. Flow, even though it's been a shit show because of earnings, looked better, right? It wasn't that aggressive put sweeper activity. So that's where you would find a long. And what happened here was everybody was sitting tight, waiting to see if there was going to be any size selling at a mock on the NASDAQ side. That's what everybody was waiting on when there was $2 billion to buy that showed up when the NASDAQ reported. That's where you got this move. All right, so we'll see how that carries into tomorrow. But that was the intraday setup. All right, and again, today, the Dow was flat. The Dow was flat. So as yucky as this day seemed early on, it really wasn't everything out there. You had some stocks that were just raging throughout the day, like this animal, that, they've been buying this thing on every little dip, as a lot of you guys know. A lot of these commodity names, they've just been buying the daylights out of. But, it's easier now to say, we should have played this thing when you're worried about overall weakness. You don't know how it's going to affect it. You don't know how it's going to affect it. But there were things, I don't know how steel ended up, but that was strong. Look at this. Look at Nucor. Good gracious. So a lot of these things look like this. Even that piece of garbage X finding a way to sustain an uptrend. So a lot of these commodity-related names have been pushing higher on more inflation talk. Rates were down today. Rates were down. So for me, again, I like to look forward. Like these look like where all the momentum is, etc. I'm looking more towards tech. I know it's just one day, but that's where my eyes are already going. Tech, beating up tech, beating up growth. Some of maybe the reopening names that haven't participated. All right. The problem is we still have a week of earnings to get through. So I'm not really looking to, get crazy anytime soon. Very quickly, as far as flow is concerned, this was the sweep of the day. NEE has seen flow in the past. This thing's been a beast for a while, but you got a little dip there, some consolidation recently. That's one of the top sweeps today. And then now caught some action. We'll see what it looks like when open interest updates in the morning tomorrow. Could be either a call spread or a roll down of strikes. So maybe not as bullish as initially thought when that first sweep came in. For me, if I was bullish on the name, I almost rather it be a roll down of strikes than a call spread, because that just tells me that somebody was early buying post earnings weakness possibly, and is just readjusting the position, adding some more money, that sort of thing. So that would be more bullish to me than a call spread. I'm not a big call spread guy. But there was also some weekly action. Okay, aside from the size we saw, there was some weekly action where, you could have day traded it if you were looking to do that sort of thing. All right, so let's get into, and then I'll take some questions. Let's get into some of the stuff we look at every week so you guys could see where we stand. There's some really interesting stuff out there right now. All right, let's go to this first, because this came out. I basically glanced at the headline of it, the Cliff Notes version, but I figure we look at it together. Hold on. So the BOVA client flow came out again, and you can see the title of it, right? So we started to see that on the hedge fund indicator, that hedge funds started to get aggressive selling out of their long positions, right? And, and this is, you see the crappy price action, okay? This is what it looks like. This is the worry that we have when hedge funds are longer than we would like. They can have an impact on the market because they manage a lot of money, all right? And who's been selling into the close? Who's been selling into strength? More than likely, right? It's been the hedge funds. Okay, we know that now from not only our indicator, but from the BOVA update that came out today. All right, so let's take a peek. You can see here, pretty aggressive. Let's take a peek at what they did here. Institutional clients, they've been selling, right, all year. We talked about that. Hedge funds went from long to short. Private clients, which I guess they consider retail, but their clients have been buying. So you got hedge funds selling their longs and private clients have been buying, which is an interesting wrinkle. All right. And you got buybacks here, which have been strong. We know that. Here's what they've been selling. All right, so this is the total. Only 4 of 11 sectors saw inflows last week. ETFs as a whole, where are they? Oh, healthcare, real estate, barely. So only healthcare saw inflows. Tech led the selling. Selling was driven by hedge funds. Institutions sold a little bit more. Retail, not that much buying. Corporate, that's buybacks, right? I guess they consider that buybacks. And outflow driven by large caps. That's usually the case anyway. Let's see what they were selling. Ooh. Net buys only in healthcare. Wait, did I look at it? Oh, no, I didn't look at this. This is different here. Okay, so net buys only in healthcare and financials by hedge funds. healthcare, and financials, and not much either. Not much. Hedge fund selling was concentrated in large caps. Commercial services saw biggest inflow, tech biggest outflow from institutions. Wow, look at that. Institutions selling tech. Looks like they bought some commercial services. Yeah, commercial services, healthcare, and a little real estate. Institutional counsel. So that's institutions here, what they did. Muted flows across sectors, but fins saw the biggest outflow. And look at this. Private clients did the opposite. So they sold financials and bought a little tech. So they got creamed a little today. So, what would be ideal, right, is if you got these two on the same side, right? If they were both net sellers to the magnitude like we're seeing the hedge funds, that would be pretty bullish. So again, is there any major takeaway from here? I don't think just yet. Just again, I think everybody misunderstands when we look at hedge funds as a whole. It's the extreme signals that are meaningful or notable, okay? But the reason why they're notable is because when they need to sell, they're going to have an impact in a negative way on markets. When they need to buy, they're going to have an impact in a positive way. You understand? So it's not like the most traditional indicators you look at. You get a buy signal, a sell signal. It's when they flip, when that goes into action, that's what really have an impact on the market. Financials led buybacks, as always. All right, so interesting, but again, I don't think there's anything here that sticks out as actionable. Again, you can look at his pinned to private Twitter. Not pinned. You can go back and search it. I had it pinned most of the day. You guys probably saw it. All right, let's look at some of the other stuff quickly. And then I'll take some questions and we'll talk about it. Here's hedge funds. All right, and we'll see what today looks like. So ultimately, if we get hedge funds down here again, you know what I mean? Coming out of earnings season, I know it's hard to believe you're going to have another decent setup here. You're going to have another decent setup here. So we'll see how that turns out. Again, there's more work to do, but we'll see how that turns out. So this is what we're looking, and this also was kind of a negative in a way. Again, easy to say that now, but you see how they chiseled away at gamma. Even though it was positive, they chiseled away at it, and they opened up a little window for some volatility. What we want to see is we want to see this get to negative. You get some bullish signals out of the squeezometer, tactical sentiment, a couple of other short-term indicators. And again, hopefully it's at a time where sweeper activity can provide an edge on the timing, and we could catch a nice squeeze. All right, so that's the if you want to be prudent, if you want to take a more conservative route here and stay disciplined, that's what you're kind of sitting tight here for. The problem with that is it may not set up for you that way. Right? That's what happens a lot of times. You wait for it, and it doesn't come, right? You get a squeeze without it. Or the markets bounce back and sort of chop around without it. But that doesn't mean that you have to take the needle and go throw away your money anyway. You know, that's, for me, like, that's the only thing that would get me a little bit excited, especially as far as the overall market. But I'm hopefully coming out of this earnings season, I want to start to look at names a little bit more. It's been the total opposite, but hopefully coming out of earnings season, we could focus on individual names a little more. Here, sectors, this is going into today. All right. And if you remember the last time we spoke, the only thing bullish was energy. Right? The only thing bullish. Now, everything else came off a sell signal or is still there. Now, what's interesting is look what you got setting up here. Semis. Let's see what they look like after today. Wow, that was a nice reversal there too. Look at that. But you got semis setting up on the sentiment side again, right? Similar to last go around. What I mean by last go around is this. Buy sig to sell sig. Maybe back down to a buy sig. Tech, right? Going into earnings. Why sell the news? Yeah, here's your answer. That's why. That's why. Again, you really, this stuff, all sentiment across the board, you don't need to try to overanalyze this stuff. It's just pretty general, simple stuff, right? When it's down here, if you have an interest in tech, it's telling you you have a pretty decent risk reward, okay? Doesn't mean you're going to cash your ticket, right? Doesn't mean you can buy weeklies and you're guaranteed a winner. But what it's telling you as far as a swing position, okay, if you have an interest in tech and you're looking for an entry, the risk reward is worth your while down there. As opposed to up here, it's not. And again, you know, these days more than I'm used to, right? Whether I'm a boomer or not. You know, a lot of new traders, they look for exact buy and sell signals. If tech doesn't top out the minute this goes into the red area, it's useless to them, right? Why? Because they put on a short and there was a little more upside in tech and they got their ass handed to them. All right, but it's pretty simple stuff. Yeah, and this game is all about odds and probability. When you start to look at it that way, you'll find it makes a lot more sense. You know? All right, so this is obviously what I got my eyes on here. I don't know what's left earnings-wise. Do we have a lot of earnings left in semis? We do? AMAT's a big one. Yeah, well, their window opened up, Ani, so, you know, when their window opens up, they fire. Now it'll be interesting. Well, I don't know where VIX ended up or whatever, but it'll be interesting to see how they play it. So we do have semi-earnings coming, a decent amount, I see from what you guys are saying. So that's kind of the problem here, unless maybe you take a shot with the ETF. You know, or hopefully this lingers a little bit till we get through the bulk detail. I don't even know what that means, MGR. I don't even know what that means. No, this is all they got. This is all I got. You mean the actual days? No, because again, I think it's used not as exacts. You know what I mean? Not as exacts. If you use it as exacts, I think you're going to get in trouble. So anyway, we'll keep an eye on this. Oils had a nice bounce. Some again had every other individual energy name, I'm sure, is different. Financials, they don't want to come in. You know, we saw JP Morgan see some buying and stuff like that again today. But they've been a rock. You know, there's a lot of demand for financials, a lot of demand. What else? Biotech, that was the last bull signal here, has creeped up. Healthcare had a really nice run. Yeah, this got hot today. This too, you know, because of just the demand for commodities, materials, and XME have remained, you know, neutral has been the most they cooled off. But, you know, the other thing that has pissed me off, what we were hoping for more correlation out there, right? Everything moving together. And we got a couple of days of it, if you remember, and then it went out the window. Like, look at today. Today was the perfect time for everything to kind of move together. You know, but they took advantage. And here's the thing. With the Fed, I wish I had that chart. You know, with the Fed at the same stance where it's at, you know, you're going to have money find a home somewhere. Now, when they start to move, maybe a little bit different. All right. And here's just basic, you know, trading ranges. You know, again, coming into today. So you can see really nothing too appetizing out there, you know, to get excited about. Hence why we felt we should take off risk and be on the safe side. You know, forget about individual names. There are names getting destroyed out there, right? Destroyed. You know, for every Playboy that's rocking, there's a list of names from here to Chicago that are getting absolutely destroyed. So ideally, and then we'll get into some questions here. Oh, and one more thing, because this was big talk. So you got that analog from 2009, 2010, right? Things get a little volatile, choppy here, and then head south. You are here. And you know what's nuts? And this is the thing to remember, okay? Because we get wrapped up in these daily moves and intraday moves, okay? If you think they're going to make any potential downside easy, you are nuts, okay? So even though when you look back at a chart, it looks like this, and you think it's easy money to the downside, just look at what happened today and times that by 50. All right. So if you look at it on an intraday basis, it's going to look like this. Right? Try staying short through that. That's the problem. Right? Everyone's, oh, yeah, you know, it's toppy. We're going south. I'm putting, yeah, okay. We may net go lower. Go ahead. Sit through a short through this. You know? And then you see them, they got this bear bias, like the end of the world's coming, and the first squeeze, they tap out. You got no shot sitting through a short, tapping out on the first squeeze you see. You know, but that's the difficult part. That's the difficult part. And, you know, even on the long side. But that's why the play is to go to cash. That's the play. You understand? I mentioned to you guys, right, to members, there are a lot of times in this game where you need to focus on not losing money, not making money. It's not about making money all the time, right? We went through a period, a year where COVID hit. You know, the Fed went all in, the government went all in. That was a time to focus on making money, without a doubt, a long period of time. But you better get used to, in this game, that there is a lot of time spent in this game where your primary focus has to be to not lose money. To not lose money. You know, and then the climate, especially, you know, heading into earnings season, it was a perfect climate to be concerned about that and not worry about the one or two ideas you might have had that went higher, where, you know, you're not even paying attention to the other 10 that went south. So that's what, in my opinion, that's what I think we're in right now. I don't think the downside is going to be easy. I think there's going to be monster squeezes, but I think our primary focus has to be to try not to make too many donations here. Yeah, and, you know, Ani, that time probably don't come until maybe the Fed pivots, right? But when that time comes, it might be too late. You know, the chop probably already ate your premium up. And then when the Fed pivots, that's when the window opens for a larger debacle. So personally, I could tell you, you know, what I'm doing and the stuff I'm looking, the same stuff that you're looking at, how I'm evaluating it and how I'm putting it into action. And that's what I'm doing. You know, for me, it's not a time to try to make money. Try to pick and choose certain spots to make a little bit of money, you know, entertain myself, keep myself busy. But this is what I can see. This is something like right now, with the information that we have in front of us, this is something I could definitely see out of the market. Something like this. Because everybody, you don't understand. You guys see it though. Sentiment shifts so drastically, so quick these days. It's unbelievable. And the first sign of weakness, of real weakness, you know what you're going to have. Every bear out of hibernation, every retail bull scared shitless. You know what I mean? So it's going to be really, really difficult to get a clean downside move out of this. It's going to be really difficult. So my gut, again, things change on a day-to-day basis, but what I see in front of me now, I kind of see something like this. And you want to talk about painful? You think downside is painful? Downside's not painful. You're in cash, you feel like a champ. Downside, right? You're a bear, you feel like a champ. This is an effing nightmare. Oh, we have bears. We trapped the bears. Get ready. Here we go. Psych. Then you catch all the bears here. Whoop. Then you catch all the bulls here. Whoop. Then you catch all the bears here. Whoop. Bulls. Whoop. Bear. Whoop. Until everybody says, fuck this. And then you lose. All right? You know what I'm talking about, Lewis. No, Pete. Institutions haven't taken a part of this market in quite a while. Yeah, this is what Tom Lee is talking about. I got to go back to it. Tom Lee's talking about this, not hedge funds. Tom Lee's talking about institutions. Both of us showing the same thing. This. So see, they haven't come into this market in a long time. As a matter of fact, they've been sidelined for quite a while. The last time they came in a big way was here. It was like a 3-month period. Yeah, we know, who knows? You know what I mean? These are we don't know every exact buyer, but these are just institutions, and the way they measure them, like institutional clients at these firms, this is what they get on them, right? And you could see, like, as far as being all in, they very rarely are. You know what I mean? It's almost like it might be a topping sign when they finally do enter. But the power behind this COVID rally was basically you had nobody believing in the rally. Then retail started to come in, but you still had hedge funds and some huge money on the sidelines. And now they're in, institutions. Tom Lee thinks this bull market doesn't end until you get that. Until you get that spike. No, I don't think that was August, was it? I think that was pre-COVID. Or maybe you're right, is it? August? Is that the last time? Maybe you're right. I don't know. Maybe you're right. COVID was what year? What year are we in? I don't even know what year we're in. 2021 right now? Jesus Christ. You think it's a joke? I can't keep track of any of these. Weeks fly by. I don't know what the hell is what anymore. So you might be right. It might be, this might have been August, right? So that's after COVID. You might be right, Pete. You might be right. But that's Tom Lee's thesis. That the bull market's not going to end. And he may be, he may be right. Like if you have this play out, that chart we just looked at, where is it? What the? If we have this play out, this is not the end of the bull market by no means, right? So, but we got to see, like, even this is like, if you go into a period like this, okay, that's a perfect time to be stock pickers, right? And that's what I'm hoping. That's what I'm hoping, that coming out of this earnings season, we start to pick names again. And this doesn't bother you as much. You understand what I'm saying? We haven't had that, right? If you remember, we've been talking about that for a long time now this year. That it didn't pay to be stock pickers. You were better off just riding the S&P 500. You had a better shot at making money off the upside, because if you picked the wrong name, you got screwed. So what I'm hoping is this consolidation loosens that up, right? And we can start picking names, and then you don't have to worry about the market. When the market rallies, the names that are catching the best flow, right? The top sweeper activity, those are going to be the names that rock higher. It's not going to be a market that takes everything up with it. Hence why you get this type of price action in the indices. But again, we'll see. We'll see. again, I don't know, Hyper. We're just honestly we're guessing at things here. We don't know. We don't know how this is going to play out. All I know is, like, for me, right, one or two things got to happen for me to get aggressive on the swing side. Okay, either the flow has got to get to that stock picking type action where we can pick some names and get C alpha there, right? But for the indices, like for me to be bullish on the indices again, I have to see this at the least, something like this, pre-election. You understand? So in other words, if we just go, let's say this is it, right? Let's say we pull back today, tomorrow a little bit more, and then we go to new highs. It's still going to be sloppy out there because they didn't reel in enough shorts. They didn't wash out enough bulls. So you're still going to have supply and sellers every time the market bumps up. You understand? It creates that shitty price action in names and in the indices and everything. You need digestion. You need some sort of digestion here. Either that or major rotation. For example, growth coming back into favor, right? And all those names that have been destroyed, we start to see some real sweeper activity pick apart those names. Okay, then you can be bullish on those names because those names already have been washed out. Bulls, there's no more bulls in those names, right? Shorts, there's shorts all over those names. So one of the two things have to open up for us, in my opinion. We can't have status quo here. Can't have status quo. Like, you can't just chase new core higher from here, right? You're in the same predicament you were in with the tech names. So something's got to change. And usually what brings on that change is some sort of pullback or consolidation, usually. Yeah, and look, it can happen. It's not far-fetched. You have earnings season now. I think it's a big tell on a lot of these tech names. There's a few different scenarios that can play out. You can have some of these growth names report their numbers. They can get hit again, but that may be the bottom. You understand? That may be it. A lot of people, especially off further weakness, aren't going to think it's it, but that may be it, right? So in other words, you get these growth names that report a number that is showing they slow down dramatically or disappoint, but it may be factored into the stock. So that's why I think we'll get good information from this earnings season. Yeah, and that's, again, if this whole inflation thing persists, you got to understand one or two things are eventually going to happen. Okay, either inflation is going to really heat up, and then the Fed is going to take action to slow it down, or after the reopening, inflation is going to fizzle out like it's been for the past 50 years. One or the two is bound to happen. You understand? So everybody's focused on inflation, but the end game, the Fed is going to do something about it. Remember like what Bova said? If you ever get the Fed to implement YCC, that yield control, that likely is the bottom for small cap growth tech. So that's why you don't want to get hung up on everything everyone's talking about right now. The obvious. Well, obviously there were signs of some inflation out there. That's obvious. We know this already. We know this. What people aren't talking about is that the Fed can do something about it. Even if it's short-lived, the Fed can do something about it. And for a 3 to 6 time horizon, put in a bottom for everything hurt off inflation. The Fed can't do shit at this point. You know how many times I heard that, Dan? If I had $1 for every time I heard the Fed can't do shit since 2008, I wouldn't have to do anything. I'd just retire off that. The Fed basically bottomed this market, I don't know how many times, by itself. By itself. What do you mean they can't do anything? I hear the same lines over. They have no more bullets. The Fed is useless. The Fed's never, you can rig the game as much as you want to rig the game. You realize that or no? Well, listen, I could tell off what we're seeing right here, what the ultimate fear is going to be, right? When the market sells off inflation, where right? Already, you could see already where people are going to be scared shitless to buy anything. Already. Guys, I've been hearing the same shit from 2008 all the way to now. The same shit. It's just different month. The same shit. I'm being honest with you. Same exact shit. Do you know how many bears have gotten devoured over that time frame? Do you know how many once upon a time bulls were scared shitless to buy a stock ever again because of it over that time frame? I've been hearing it forever. All different deflation, inflation, deflation, inflation. It's a problem when you can't rig the game. And there was a period of time where it was considered a naughty thing to do, the Fed intervening and rigging the game. Now it's a rigged game. You know what I mean? 2008 was a debacle because Bernanke didn't want to rig the game. Then he said, uh-oh, I better rig the game. 2000, what was that? 18, 19 was getting a little scary into Christmas because Powell didn't want to rig the game. Again, guess what? He decided to rig the game. It's the same shit over and over again. Right? COVID could have been a debacle if the Fed didn't want to rig the game. But once you start rigging the game, you open up a can of worms. That's why people didn't want that. They wanted free markets, but it doesn't exist. So anyway, that's the stuff we really doesn't make us any money. I mean, it may be entertaining, but it's completely useless to even talk about. Completely useless to talk about. In the meantime, we got to see how this plays out. And, like I said, we got another couple days here until flow cleans up. So we'll hopefully get that edge back. Because, that was a problem. I give you an example. Today was a perfect example, right? Like you had all the signs of an intraday bottom and the real missing link to have the conviction to, go in and take a shot for a bounce or a squeeze was, that clean band of sweeper activity coming in, signaling that the momentum was about to flip. What we had instead was some call buying with earnings flow mixed around it. And earnings flow, a lot of it's protection. Yeah, the anti-VIX could be early in some rocky markets. Again, that's why the sweeper activity, as far as timing, you can't beat it. All those other indicators, you don't mind if they're early because the sweepers can confirm it. But when exactly. When you don't have that sweeper edge, you don't know how early you are. Where you're going to put a stop. Where do you pull the plug? That sort of thing. So, but another week, and that should we should get that back. So that's a good thing. It measures VIX buying and selling intraday. No, well, just in general, overall. But the strongest signals are always the ones that, line where everything lines up. You're going to squeezometer, like that didn't even get to a 3 handle. I think 40 was the low on the squeezometer today. But you get a 40, under 40 squeezometer, anti-VIX bull signal, and you get some sweeper activity, and you got a decent signal. Sharpies did some selling last week. What's funny? Everybody last week, over the last week, did some selling. Hold on. Everybody over the past week did a little selling. Shorts covered, longs trimmed a bit. This is Sharpies. So that's why, a little bit of a pull, hopefully it leads to a soft week, is good. Because, further strength, the likelihood is this is going if we get some weakness, then maybe we'll see a U-turn. Then again, right, you get some consolidation with some little violent pulls in between, and you never know. Maybe they pick a spot again. Same with them, these guys, They look to be early. They don't care. A lot of times, that's what was really noteworthy about this whole rally, is that they remain this long for that long. Usually by this point, they're already hedged fully most of the time. They don't care about further upside because they caught this whole move aggressively, and they stay hedged for the remainder until there's something like this again. Like here, look. See, they were early. So they missed this whole upside here. They were hedged. All right. And then, whoop, that's when they get aggressive. That's the basic premise. This is what the main. Oh, this is the Sharpie riffraff combined. This one. This is just Sharpies. Anyway, everything right now looks the same. To me, everything looks the same. Everything looks the same. You know, nothing too appealing, and you're going to need some weakness or consolidation to open things up a bit. The selling may go away. You know what's funny? The selling may go away. If you look at the statistics, there's nothing really behind it. You know, there's a better window as far as returns are concerned, different months. But I think the best, what was it? The best here, I'll show you right now. Bova had a whole thing on it. Look at, you know, and it changes presidential cycle, blah, blah, blah. But look at this chart. All right. You sell in May, went away. You want to kill yourself. This, over my career, these are the months to watch out for. September, October. Those are the two. Right. I think Bova said buy in May, sell here, buy in May, sell in August. That's usually what I remember. Look at September. What a nightmare that is. September is a bastard. Yeah, this is May. Look at May. Sell before the ding dong. Yeah, so it's again, it's a clever line, you know. Sometimes it works, sometimes it doesn't. May work this go around because we're going in at highs. Otherwise, I wouldn't put too much into it. Yeah, I think it works out now pretty good because you really got nothing cooking here. You know, so to take some profit here. I hope, guys, I hope we get a flashy type crash quick. That would be the best thing in the world. I don't think we're going to get it, though. You know, I wish we'd get that because it'd be quicker and it'd be over quicker, you know? But I don't know. I don't know if we can get that. And not to say that there's not going to be days that it can feel like that. You know what I mean? It can certainly feel like that certain days. But you're going to get like we saw today. Squeezes. So anyway, the moral of the story is to stay patient. We get flow back on our side probably towards the end of the week, next week. And we start paying attention to post-earnings action and see what that tells us. You know, see what that tells us. But stay patient and take it nice and slow. You know, if you see, let's say a name, like one of these tech names that have been battered and they light it up, you know, I mean, you can fire. That's, you know what I mean? So that's why you got to take it on a case-by-case basis. You know, some names already have corrected, have crashed. I tell you what needs to crash. And most of you are not going to like it. Bitcoin has to crash. I've had enough. I've officially had enough. Okay? Now there's a ether character. I'm done. I had a tough time picking, staying on top of this beforehand. Now, Dogecoin, Ether, enough now. Okay? It's not even Bitcoin anymore. It's not even Bitcoin anymore. So they'll get them. Well, they'll get them. It's only a matter of when. Trust me. They get them. And they're going to get them hard. It's only a matter of when. But yeah, no, it's out of control. It really is. I see some of these kids. I got to give them credit, though. They made loot. The problem is they're not going to lock it in. They're so manipulated. They're not going to lock it in. But some of these kids made a ton of money, man. Ton of money. You see them, all over the internet, throwing money around like drunken sailors. But they got their whole life savings in this shit. So when it comes, when their number gets called, they're going to be on this street corner with a cup. You know what I mean? That's the problem. But I'm sure, listen, the smarter people out there have locked in some money, guaranteed. They may not admit it because they'll get killed for it. But you see, all these big shots, they all sell eventually. Not all of it, but they sell enough of it. You're not a winner until you cash in your chips, right? Yeah, it's become that's what it is, right? Let's be honest, it's like a pyramid scheme, right? You keep getting more and more people to buy it, because that's how you can sell it, right? If you don't get enough people to buy it at higher levels, how the hell are you going to sell it? But it's some of you youngsters, maybe you don't realize it, but it's out of control. You know what I mean? It's out of control now. Yeah, you're gonna tell me, you're gonna give me an argument how Bitcoin is gonna change the future and it's real and it's the currency, it's this, and then you're gonna go bring me a Dogecoin right after it. I mean, come on now. You know what I mean? Or you're gonna bring me some digital art that goes for $1 million. Maybe you could have convinced me off Bitcoin. Maybe Bitcoin, you could have convinced me. But once you bring a Dogecoin right behind it, I lose all respect for you. And again, it's the frenzy behind it. The frenzy, it's a frenzy. People have lost their marbles in these things. Yeah, I never seen anything like it. Think about that. That's like me, having stocks and, you telling me to sell a stock and lock in profit, like I want to kill your family for telling me that. They're crazy. They're crazy. But anyway, that, that's liquidity out there, the Fed and everything else. But little by little, you see, they've been popping bubbles little by little, left and right. So people think that bubble can't be popped. They're going to be mistaken. But yeah, that's the last bubble now. That's the last bubble. That's a threat. Everything else, the market gods have done their job, no? SPACs? Are SPACs around? SPACs still in business? No? Remember SPACs? Yeah, exactly. It was fun. It was fun. But this Bitcoin again. I don't know enough about Bitcoin to say it's SPACs or even SPACs, right? It's just the behavior behind it that can't last, and that's what I'm saying right now. Again, not even in Bitcoin, in the other stuff around Bitcoin, it's about that time. It's about that time. So, wait. Oh, wait a second. Ether, you're going to laugh. All right, but understand who you're talking to here. Ether is Ethereum? How didn't I figure that out? Are you serious? Oh, my God. I thought it was a whole new thing here. What is that, a new nickname for crying out loud all of a sudden? No, but they were showing a chart on CNBC that Ether just started moving. Oh, maybe they were showing Ethereum compared to Bitcoin, the comparison, the pair. Ah, come on. I should have. I mean, that's ridiculous. Yeah, that's what it was. Ether to Bitcoin. How'd I botch that? Like, that's embarrassing. That's embarrassing. I've heard of Ethereum. Let me ask you a question, and then let's wrap it up because I can't talk about this crap. What about the other stuff? Where are those guys? My favorite ones. Nipple. There were a couple others. They gone? Nipple? Ripple? No more Nipple? Is it? I haven't heard a thing about it. Yeah, Litecoin. There were quite a few of them, right? Everything's pumping again. So it's probably getting ready to... Yep. So anybody who's in that stuff, I don't even want to waste my breath, but I might as well just say, just be smart, all right? Be smart, okay? Every day's not a holiday. They don't give free money out there. It's not that easy, life. What you're up on paper means nothing. Be smart. Smarten up. Yeah, I'm telling you, the 90s were sick. It's just technology was different. You're not going to have anything like Bitcoin, but the late 90s was crazy. The late 90s was crazy. This has been a little different because, you got like crypto and stuff like that. You could have never had it in the 90s, but there was some crazy stuff in the 90s. A lot of people made a lot of money again on paper, but I honestly, as far as stocks, it was crazier. You guys don't understand. You get rich off a stock. Forget about like going from $2 to 30, 40 bucks. I'm talking about going from 10 to 100, splitting, going back to 100, splitting again, that's what the 90s were. Splits. Everything split. You would announce a 2-for-1 split and you would double. And then you would announce another split. You understand? So people would start with a measly 200 shares of a stock and they end up with 8,000 shares. That's the craziness of the 90s. No, I was wet behind the ears. I got in the game 98 and I didn't have a clue of what I was doing. So I was building a book on 90. Steven, I'm going to choke him down, I swear. I was building a book through that period of time. So I didn't have much to lose. You understand? So I got lucky. But I'm telling you, the 90s were nuts. You guys think this is the only crazy time? You were born in 97? I got to get out of here. That was the Russian ruble crisis. I got to get out of here. All right, boys and girls. On that note, let me go back to my walker, into my rocking chair, watch the ball game, smoke my pipe. I'll see you guys tomorrow. For the rest of you, have a good week. Take it easy. Be good, guys.